Good day, investors. I'm Rachel McVeary, Senior Investing Editor at U.S. News and World Report, and I'm here with the contributors to Advisors Corner, all of them financial advisors, to talk about trends in energy investment themes now. Also, I'm hoping to touch on how developments in AI or artificial intelligence are accelerating progress in some of these energy areas. So today we have Julie Pinkerton, Chartered Financial Consultant and CEO of Evozen LLC, and founder of Client First, a fintech platform that connects independent investment, insurance, tax, and legal professionals. Scott Ward is a certified financial planner who joined Compound Planning as a specialist in retirement transition strategies and portfolio management, among other things, and a national ambassador for the CFP board. Margarita Cheng is a certified financial planner, member of the board of directors for the CFP board, and founder of Blue Ocean Global Wealth. And Kate Stalter is a Series 65 licensed financial author and investing expert who's done everything from starting up an RIA to launching an exchange-traded fund advisory for Cabot Wealth Network. So let's dive right into the discussion about how to invest in energy now, or just observations about what's going on now in energy markets. It's obvious that nuclear energy, fossil fuels, and natural gas are receiving a lot of attention these days, with a focus away from renewables and Congress phasing out solar and wind energy related tax credits. But is that the whole story? What trends do you see now among energy investments, and where do you see the most potential for investors? And if we could start with Julie on this one.
Absolutely. Well, I'm seeing an awful lot of rethinking and retooling on the major projects simply because of the new thinking in terms of the administration, some revisions and thoughts on the leading technologies. And really, we've had a chance now to really view a lot of the benefits and risk of each of the options. And as a result, we're able to now to see how those technologies are responding in different conditions, such as Florida during hurricane season. One of the things that I saw recently was that the Ivanpah solar project in California's Mojave Desert is actually shutting down. It was at one time hailed one of the largest solar farms and kind of the be-all end-all for solar energy. And technology is moving rapidly, and another technology has already eclipsed it far earlier in its lifespan.
And there's things happening in real time also. And there's been some projects that have been put on hold because of the government shutdown and Trump just, kind of playing hardball on that front.
Absolutely.
Anybody else?
I knew about that California solar project because it's always kind of fun to fly over that thing when you're flying out of Vegas. And the thing is just enormous. And it was, like you said, it was kind of startling to realize that that had been shut down, and it was prior to some of what's been going on in Washington. It was like, as you said, due to new technologies. One thing that has kind of caught my attention lately with regard to some of the energy ETFs that are out there in particular is, regardless of what you might see happening in Washington, some of these clean energy ETFs are just on a tear. Like ICLN is one. Let me see. That's the iShares Global Clean Energy ETF. You've also got the PBW, which is another clean energy ETF. So I wanted to share this today just as a way of letting the viewers know it's not necessarily, don't go by your hunches of what you see in the headlines. There's often, as Julie said, there's often a lot more to the story.
Yeah, I've noticed some of these ESG focused ETFs, and I'm not sure if it was one of the stories you did, Kate, but it was outperforming VOO this year. So, I mean, it's just something to keep an eye on, like these ETFs that are focused on high ESG scores and things like that. Occasionally they can outperform even, on a hot stock type of situation, a general index fund.
Sure. Yeah, I think we're on a dual track here. I think in the short run, what we're seeing is a lot of what we would call traditional energy companies such as Exxon and Chevron are recording record profits, and that's a good thing. But in the long run, what I do believe will happen is today's energy profits will fund tomorrow's clean energy grid. And what I mean by that is it will give the cash flow to invest in things like renewables, grid upgrades, smart technology. I think those will be the real growth drivers of the decade to come.
Yeah, and I have noticed that as well. Electrification and the grid infrastructure to support that is a big deal. Is anyone here familiar with the differences between what we refer to as battery storage and this support for the grid infrastructure? That's something I'm not quite clear on sometimes.
It's my understanding that battery storage is really has to do with the actual batteries that are within like EVs, and that the battery storage is the physical hardware that is holding the electricity to be able to have available for use.
Right. And that was my understanding as well. And electric vehicles are not directly related to this conversation necessarily, but there's these indirect beneficiaries of what's going on in the energy markets now, such as data center stocks, those type of things. So we
Oh
can get into
yeah.
that later if you want, if anyone has a comment about that.
Oh,
Absolutely. I just wanted to jump in here too. This is
Sure.
to expand upon what Scott was saying. Right now, we have been receiving our energy from the traditional structure, mainly from fossil fuels. And just as Scott mentioned, the profits from fossil fuels can lead traditional energy companies to invest in smart grid. And with smart grid, that's when electricity is generated from renewable sources like wind, solar, hydropower, and geothermal sources. And essentially, what the smart grid does is a two-way transmission for active management, real-time adjustments, and that is related to EVs and these data centers.
Right. And I like that the idea that traditional energy stocks are not necessarily like in opposition with some of the newer technologies and the development in renewable energy. Everything is kind of moving in a direction. Some maybe are focused on renewable energy rather than traditional, but the traditional companies eventually are making the transition as well. Is that what you all are seeing?
Yeah,
yes.
that's been for a while, actually. I think even a lot
Yeah.
of them have kind of at the same time that they've been making investments and acquisitions for more of the fracking technologies. They've also been looking at hydrogen and other, like you said, Rachel, other alternative technologies. This has been going on for a few years now, and it's a little bit under the radar. I don't think they like to talk about it too much, but if you kind of look at their financials, it's there for
Well,
sure.
Plug Power this week, I believe, is involved with green hydrogen, and that stock has just taken off this week. I think it had a 30% return so far today, and on Wednesday it had a 30% return. So, yeah, there's definitely like an awareness that I feel is kind of flying below the radar. And the media will pick up the stories individually, but it definitely seems like a trend, you know.
I do.
And go
I
ahead.
Can I interject? I do think
Sure.
that one of the things that's important from an investing standpoint is to look for companies that have good, strong cash position for merger and acquisition activity because it enables them to be able to pivot very quickly. It's highly possible with all of the money that is going into this research is that a new technology can pop up almost literally overnight and completely change the game. And so for the players that have done a good job of being able to manage their cash to be able to have it available, have the ability to pivot very quickly and very acutely.
I think that's a great point. And so just to get into the next topic, I mean, what do you think the role of artificial intelligence is now in certain categories of energy investment? What's it doing for these stocks?
Yeah, so I think that's where the green edges are. As I think about AI and the demand for AI and how that will continue to likely increase over time, the data centers who support that AI will need energy, and then that will cascade into a number of different opportunities for companies going forward. You know, I what's interesting to me is that the amount of energy that's required by U.S. data centers now is equivalent to what's required by 14 million households. I mean, it's mind-blowing.
Amazing, right?
Oh.
And
Yeah,
what type of energy source do you think will take the lead in providing what these data centers need to function? Not questions for anybody.
So in preparation, I actually looked this up. So of course we know AI is transforming industry, but RAND projects that US AI data centers could add 327 gigawatts of demand by 2030. 2030 is just around the corner. So it's not enough to say we need scalable. We need reliable, renewable, and scalable energy, all three.
Yeah, and infrastructure.
Yes.
So yeah, staying on that year 2030, it's my understanding that by 2030, the global demand, for energy among global data centers will equal to what is now required in terms to supply energy to the whole country of Japan. It's
Wow.
it, yeah, it's pretty marvelous.
And if you have the energy but no infrastructure to support it, then obviously it's not going to work out, right?
That's correct. Yep.
Yeah.
The good thing about
Totally.
AI, though, is that not only do you have, is it creating its own problems? Obviously, it's a huge drain on the grids, but it's also taking up an awful lot of water, and it's taking up a lot of water where there's already a lot of scarcity, such as in Arizona. But at the same time, it's making its own problems, but it's also in place to be able to solve some of its own problems because it does have the ability to be able to take a look and say, what is the usage? What are the times of days where, there's bigger drains on the grid versus lesser? And it is going to be able to make those adjustments to be able to pull when it is most capable of pulling and not pull when there is residential usage and domestic usage that is needed more frequently.
So what is that, like monitoring technologies or just
Yeah,
part of these type of infrastructure stocks? Just trying to get at like what that is.
I would say that it's more in the infrastructure because the companies that are coming in and building these very very large data centers, they know that they have to be able to do that. Otherwise, they're going to face a big public backlash. If for instance, in California, and I believe it's Pennsylvania, two states that are heavily invested in renewable energy, and yet their electricity costs are some of the highest in the nation. At some point, the public does vote with its pocketbook, and if they want to be able to keep going forward, they obviously don't want that friction in their day-to-day operations.
Okay. Does anyone else have a comment about some of the lesser talked about technologies like green hydrogen and electrolyzers or nuclear fusion?
Well, Rachel, I wanted to come back to something you mentioned a few minutes ago, just about what technologies are kind of being applied towards powering AI and data centers. And one thing, I actually noticed this a few days ago in just one of the Google alerts that I have about different things, and it's relevant to this. Uh, NRG Energy, that's a ticker NRG, got 800 million in loans, actually from this was in Texas, actually. So this will be taxpayer dollars because the grid needs more power to handle AI demand. So, like you said, it's not, this is really just the energy story. You wouldn't necessarily think natural gas. You wouldn't, if you wouldn't necessarily associate that with AI and data centers, but there you go. We're just going to be seeing, I think, as everybody's been saying, just a lot more of this investment and maybe not necessarily even into the areas you might initially think.
Yeah, and I can tell you just from the editorial side, the interest right now is in natural gas and nuclear. That those two are the thing everybody wants to read about. But
Yeah.
green hydrogen has a lot of interest lately, especially. And
Mm.
it's the renewables like solar and wind, things like we've seen a big drop off in interest in those. But like you say, I mean, I feel like, it's going to be kind of all hands on deck. So there's still opportunity for renewable energy companies here, especially since their prices are down.
Yes.
Yeah, I think you're onto something, Rachel. Right now, green hydrogen is really transitioning from more of a concept to pilot projects, and so we're seeing some traction there. On nuclear fusion, however, it's being more privately funded, maybe a little bit more of a slower crawl, but both are part of what we would consider emerging technologies. So I would say hydrogen is investable now. Fusion is on hold.
Yeah, I mean, how far in the future is that? Do you see that becoming like a hot stock?
Well, I mean, it's conceivable within the next, decade or two, but the money's got to support it.
Right. Anyone else want to talk about? I'd like to talk about the percentage of the portfolio that investors should be dedicating to these thematic energy investments, because I know people are really excited about it, and some people might even be going a little overboard. What vehicle do you think is appropriate as far as like an investment? And are there any exceptions to the rule or areas that might be worth taking a risk with a longer timeline, say for a younger investor who's not close to retirement? It's a multi-part question. What's the investment vehicle? And is there a certain area that's more appropriate for investors that have a longer timeline until they have to retire?
So if you want to just back up and think about it in the context of, say, maybe a balanced allocation of maybe 60% in equities and 40% in fixed income, maybe a little bit less than that, maybe 38% in fixed income and maybe 2% in cash, whatever the case may be. Typically, there's a core and satellite approach with that. And maybe not more than, say, 1 to 4%, maybe 1 to 5% max in some kind of with what we call other, maybe alternatives, or maybe some kind of bent toward certain sectors. Some traditional, I mean, some areas where investors are sort of filling that blank with is in things like infrastructure. Infrastructure really is more of a catch-all. It allows ETFs to invest in companies that build things, that haul things, and can support not only the infrastructure that needs to be built, but the energy to move it.
Okay. And should people be cautious now about investing, like nuclear energy stocks, for example, are bid up, to very high valuations right now. So I'm just curious what you all think about investing now in nuclear energy stocks versus waiting.
Hey, Rachel, I think I'm gonna come at that. I'll answer it, but in a little bit of a different way.
Okay.
And this is a little bit piggybacking on what Scott was saying, I think, is I mean, and I don't track individual nuclear stocks really. I mean, a lot of them you can actually get access to in a super boring way just through utilities that are dividend payers and just kind of, do nothing but give you steady income over.
And that might be the smarter way to do it.
It's definitely a stable way. That's right. It generates income. But you had asked you had asked a question about, like, for example, say younger investors maybe, or people who might want to take a flyer. And this is where I'm kind of going to
Yeah.
A little bit segue from what Scott was saying, which I agreed with, is, for any specific area, maybe other outside of your core and satellite, where you see a stock and, like we talked about Plug Power, that's not nuclear, but it's just kind of a very volatile, low price stock. If you see something like that and you're like, hey, that's kind of exciting, that's kind of cool, sure, dabble in it. But that is not something that even for a 25 or 30-year-old, that should not be part of your, allocation of something you're going to need in 40 years. That's your play money if you have it. So I think still just sort of like we've talked about a lot today, some of these ETFs, if you want to allocate a small slice to it, maybe like 5%, 10%, just depending. It depends on what your plan says, really. One thing too, you reminded me of with that question, Rachel, is you're not going to find solar, wind, battery companies. Those are not really in the S&P energy sector. If you buy an S&P energy ETF, those companies are usually going to be other sectors like utilities, tech.
That's a great point.
Yeah. So
Yeah, and to some of the tech stocks, they kind of
yeah.
play double duty, I feel. So,
Exactly.
okay. And any other exciting areas of investment that anyone would like to mention? Maybe something we haven't said yet.
Well, one of the things I wanted to say is I love how Kate mentioned some ETFs. ETFs, exchange traded funds, help democratize access to these emerging technologies. Some of these ETFs, so I'd caution people, don't get too excited. You don't want to get something that doesn't really have a track record, or because that means it may lack liquidity or be too thinly traded. But some ETFs have been around a while. Do your due diligence, but for example, grid, First Trust NASDAQ Clean Edge, Smart Grid Infrastructure Index has been around since 2009. That's a minute.
Yeah, a long time. Yeah, so anybody else?
Yeah, I think that drawing on what Kate was talking about, and both Scott and Reed also, the I think it's important for any investor. This is a great area to make sure you have a really good grasp on what your risk tolerance is. But I also think that it's an area where, seeking out professional advice really is valuable, because just like in entrepreneurship, all of this is still so new that you've got, companies that are, basically, pre-seed, those that have, kicked off and are actually going. And then you have companies that have actually been around a while that are now just expanding. And there can be a lot of different ways to be able to approach this market until you get a little bit of experience, under the belt. And it's nice to be able to use like ETFs and to be able to have a chance to see what is actually happening out there. Because sometimes, like you said earlier in our conversation, the headlines don't always give you the full story. And once you can understand, the levers that occur with all of these different kinds of energy, as well as all the political and domestic, you have a real opportunity to be able to dig in and find the right kind of investment that will work for your particular situation.
Yeah, I want to put a fine point on that, Julie, because I think you brought up a good point, and that is the headlines shouldn't drive what's in your portfolio. I mean, there's always something sparkling out there. I would drive it back to the plan. What type of plan will keep you on track to retire on time with confidence. And so I would let the decisions regarding your investments be influenced by the plan and rather than the headlines.
Absolutely. I think that's a good place to stop. This has been a great discussion. Thanks for joining me here. And viewers can access articles on this topic from the links below.